Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting however with the volume profile on the weekly time frame, which as you can see is nicely respected. Resistance, eventually breaking inside, moving to the value area high, finding resistance here as well, support on the point of control, and now with this weekly candle we are attempting to break above the value area high. Now, something we do have to keep in mind is a deviation where we break above but eventually get respected below the range value area high again, increasing probabilities to move to the point of control. If price can manage to close a weekly candle above 50.5k, which is the high of this white box here, then we could potentially wait for a retest of this area. If it fails, we're going to be looking for lower prices. If it holds and potentially continues, we might look for higher levels and potentially even all-time highs. However, we still have some resistance above where we are now. These are the weekly gaps on the chart that are relevant at the moment. To the downside, we had this weekly gap over here acting as beautiful support for then a move towards the upside. And now we are at another weekly gap here acting as resistance. This gap is between 52k and 53.3k. If price can flip this gap over here and fill it, then we could be looking for the next gap, which is between 59.5k and 62.3k. In between these two gaps, I still have this blue box over here sitting between 56.8k and 57.3k for some additional resistance. Another thing that is quite interesting is this channel over here on the logarithmic chart, because just like with the volume profile, price is now attempting to break out of this channel on the log chart taken from the low to the first time testing 30k over here. You can see we tested the higher end of this channel once, moved back to the middle of the channel, and now we are attempting to break out for a second time. If price breaks out of this channel, it's the same as with the volume profile. You want to see it hold for support and of course strong continuation, preferably increasing volume as well, as then you're going to be looking for wave 3s. If that is not the case and we drop back inside the channel, we could be looking for the lower end of this channel. Now on the linear chart, the channel looks a little bit different. Over here, we already retested the channel. So on the linear chart, the pivots are the same. 1, 2, 3. Price moving out of the channel, retesting the upper trend line of the channel and continuation to the upside. However, as mentioned, we want to see a big volume surge as we are looking then for potentially wave 3s, right? But so far, the volume, as you can see, is not really cooperating. It's still very, very low, especially for potentially a wave 3 to the upside. So we definitely want to see some bigger candles if we look for strong continuation and all-time highs. If we go to the 4-hour time frame, then the highest probability scenario at the moment is this impulsive scenario, where we are looking for a 5-wave impulsive structure to the upside, waiting for this wave 3 to end and the bigger wave 4 to start. The most common target area for a wave 4 is between the 236 and the 05, taken from the low of 2 to the high that we have at the moment, giving you a target area between 50.3k and 47.3k, with the invalidation being the 0.618 at 46.1k. What is important, however, is that with this move to the upside, price is definitely slowing down. As you can see, if we're looking for a final impulsive structure to the upside in a wave 5 to finish a wave 3, the volume is slowly moving to the downside as price is grinding its way up. So based on the Elliott Wave probabilities, one can say that it won't take long for price to start this green wave 4 here and have a bit of a deeper range and a bigger range to come. In the bearish scenario, we are looking for a 3-wave corrective structure to the upside in a wave A, B, and a wave C, where wave C is now ranging between the 1.618 and the 2 trend-based fib extension taken from the low to the high of A to the low of B. Now, because wave C passed the 1.618, probabilities increase for this to be a wave 3 structure to the upside in an impulse 1, 2, 3, 4, 5. However, wave Cs can be long. They can extend even further to the 2.618, for example, so we cannot forget about a wave C. If we see impulsive structures to the downside and price hitting the 0.618 at 46k, then the probabilities are higher for an ABC and a bigger flat structure in an ABC, where in wave C we look for an impulsive move towards the downside. However, if we are looking for a lot more downside, then preferably locally, we're going to see impulsive structures to the downside. Now there's only three options from the high over here that we can look at. An impulse to the downside, 1, 2, 3, 4, 5. A diagonal structure where we are looking for a diagonal to be a wave 1 structure, eventually a retracement in 2 and continuation to the downside in a wave 3. Or a double 1, 2 where we have a wave 1, 2, 1, 2 and then a big wave 3 to the downside. If we look at the impulse first here, then this is the currently out of the three highest probability scenario, even though it's still not really ideal. Here we have our wave 1 to the downside, followed by a 3 wave A, 3 wave B, and then we want to see a 5 wave C and a flat structure in this wave 2. It is a running flat because wave C did not take the high of wave A, which is the least common flat pattern. It's a rare flat pattern as well. Besides that, this corrective structure in an ABC is incredibly long compared to your wave 1. You can see I have a 5 fib time on the chart, which is taken from the high to the low of wave 1, and then double click over here to compare wave 1 with wave 2. A wave 2 being longer than 5 times wave 1 is something that is rare and therefore doesn't really carry high probabilities, which then also lowers the probabilities of this scenario, together with a running flat, which is also a rare flat structure. If we then look at the diagonal, then we are looking for a zigzag in a wave 1. We want to have a zigzag in 2 over here, and then we look for a 3, a 4, and eventually a 5. After this, we want to see a wave 2 and a continuation to the downside, and then a bigger 1, 2, and a 3. However, if you look at this scenario here, we're looking for a zigzag to the downside. Price did not reach the most common target area for a wave C and then a wave A, B, C zigzag, and it is very rare for a wave C to not at least hit the 1-to-1 trend-based fib extension taken from the high to the low to the high over here. Therefore, it also lowers the probabilities for this particular scenario. Besides, it is too early to call a diagonal at the moment as we only have one wave finished, so this is very hypothetical, and usually you only really start to think about diagonals once you have a wave 4 finished and you're moving down in a wave 5. Finally, we have a double 1-2, arguably the most bearish scenario, where we have a wave 1-2, 1-2 and continuation to the downside. However, here you can see the second wave 2 hit the 886, taken from the high of the first two to the low of the second wave 1. The 886 is a rare target for a wave 2 and a common target for a wave B or a wave X, increasing the probabilities for corrective structures here instead of impulsive structures. Now, one thing that is important, however, is the 0.618, which is below the 2-hour gap support. Price yesterday found support on the daily naked point of control that we had on the chart for a bit of a bounce. That is very nice. The next support to the downside is the 2-hour gap top, which on the 2-hour chart looks like this. It's the low of this candle over here, and this is the gap that we have. Price usually with a first touch of a gap finds support, so that is what we can look for over here. However, the moment we get respected inside the gap, probabilities are also very high to hit the 0.618. And the reason the 0.618 is on my chart is because it is an invalidation for a wave 4. If we are looking for a 1, 2, a 3, a 4 and one more 5 locally over here, we don't want to see price hitting the 0.618, which is taken from the low to the high. If price hits this 0.618, probabilities go down that we are still in a local impulsive structure, and the probabilities go up for a bigger green wave 4 to form. Even when the probabilities are higher for a corrective structure here at the moment to the downside, it doesn't mean price cannot move to the downside. It just means that generally probabilities are higher. We're still going to take this high sooner or later. If we look at the CVD divergences, then well, we do have bullish CVD divergences here on the chart, higher low on price, lower low on the CVD. But what you can clearly see is that one pivot of the CVD divergence is on the left and one on the right of the recent high. Preferably with CVD, you look for CVD divergences on the right side of the recent high or the recent low. And at the moment, it is very neutral, as you can see. From the high, price has moved towards the downside, and so did CVD. Price moving up, but there's no bearish CVD divergences here at the moment while recording this video, so we have to be very, very patient. So if you then look at the probabilities of the different scenarios, then on the weekly time frame, currently the probabilities are higher for a deviation of that range, meaning eventually getting accepted back inside the range. From an Elliott Wave point of view, probabilities are at the moment higher to still get a bigger corrective structure to the downside, which then leads to a deviation of the range. But we need to see good local weakness first before we are going to start for bigger moves towards the downside, which at the moment we don't yet have. On the 4-hour chart, we're looking for an impulsive structure to the upside where we are waiting for this wave of 4 to form. And on the micro, here locally on the 15-minute chart, probabilities at the moment are higher to still take this high at a given moment. Price action from the high has a higher probability of being corrective, increasing the probabilities to take the high sooner or later. Below price, we still have the 2-hour gap as support. If price, however, is respected in this gap, probabilities are high to fill the gap to this little order block that you can see, which is at least 49.9k, and that then increases the probabilities that we're going to be working on a green wave 4. Something that's also interesting is that we have not yet filled the monthly gap over here, as you can see, which still has high probabilities to be filled as we are accepted inside this gap. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.